And since we have done this work up here, where we had relative equal highs here and here, what did I teach you yesterday? How do you know it's a high probability relative equal high? When the right side that is identified as a potential turning point for a quote unquote potential relative equal high, the right one is going to be slightly lower than the one on the left. We have that here. We don't even need to see this ahead of time. We just need to see, okay, it ran that, and you might identify it after it does that run there. And then you start seeing it break down. See that? At the turning points, or potential turning points like this, okay? This is where, and I'm going to refer to this in my book with this lecture here. I've taught and introduced inversion fair value gaps on Twitter Spaces last year, okay? All of my PD arrays have an inversion aspect to them. Every single one of them. Every single one of them can reverse their role. Every single one of them. But it's not easy for you, and it's not easy for people that want to try to teach my stuff for money when you're actually getting it right from the source here for free. It's not easy for them to be able to teach that because I've never went into great detail like I will in the books. So that way it kind of like bridges the gap. And then you'll see everybody start teaching it then. But this is a note that's real important for you, okay? Inversion fair value gaps, the highest form of precision, the ones that are really, really trustworthy, the ones that have the highest degree of working in your favor, depends on your understanding of what I taught you yesterday and what I'm building on here. Whereas we have an area that's smooth after 7 o'clock, so the 7 o'clock in the morning starts the AM session. So now you start hunting on the 15-minute time frame, the 5-minute time frame, and the 1-minute time frame. You're hunting relative equal highs and lows to form after 7 o'clock. Well, we have that here. You may not have had the experience to anticipate this run up. That's fine. You don't need it. You don't need it. Remember when I first taught breakers? I taught that on Baby Pips back in 2011. Yeah, I think it was 2011. If it wasn't, it was 2012. The idea of waiting for a stop run and then wait for the market to come back down in to the range prior to all that run up, and then wait for the bearish breaker. In this case, the bearish breaker is this candle and this candle. The most sensitivity is going to come inside of the most lowest down close candle prior to the run up, because you have a high, a low, and then you have the stop hunt, and then the reversal. Well, that's trading with a breaker. Inversion fair value gaps, if you have a gap inside of the range that creates the bearish breaker, as we have here. Now remember what I taught you. A down close candle that is a fair value gap is a SIBI. A up close candle right here, this is the opposite, which is a BISI. BISI. Buy side imbalance, sell side inefficiency. Now, this is going to be a huge step in understanding narrative and understanding directional bias and also reversal patterns. This fair value gap here, if you don't understand what you're looking for and you don't have the element of time, Dave, and you trade back down into this fair value gap, you might be lulled into thinking, well, wow, this is an opportunity for me to take one of those ICT fair value gap buys and go long. And then it's to your detriment that it reverses and collapses on you. Understanding that it's 7 o'clock, post 7 o'clock, we have relative equal highs. It rallies after, remember the new week opening gap I talked about yesterday? You're going to discover, Caleb, that your model is going to be gravitating towards those new week opening gaps. That's your model. You're going to be trading in that direction. But before we get to that, you have to be able to look at small fluctuations around segments of time that will have a repeating phenomenon, that they all look very similar to one another. It's a fractal, okay? But the fractal element is only repeating and verifiable on the time frames I'm teaching you to focus on right now. We're not going anything higher than the 15-minute time frame. But this buy side imbalance, sell side inefficiency, that fair value gap, is going to have a role reversal where everyone else that thinks they understand it because they've been introduced to it lightly, that is an inversion fair value gap. So the market creates this fair value gap after this run here. You don't want to use that as a buy. We're so elongated and stretched out from London, and it's past 7 o'clock in the morning. So now we're in an AM session. AM session characteristic is always, first and foremost, characteristic is retrade back into the London range. The London range is whatever the highest high and the lowest low was between 2 o'clock in the morning and 5 o'clock in the morning, Eastern Standard Time. Now, I'm going to slow things down here because I already know some of your heads are spinning. You're like, dude, you said this is going to be easy. You're not complicated. What I just said is not complicated. You have to look at these specific times of the day. So if we're anticipating a rally up because of these relative equal highs, and it's after 7 o'clock in the morning, and it creates this type of reversal scenario where it breaks down, your eye should go right to, are we looking for relative equal highs or relative equal lows, or are we looking for inefficiencies? You have to go with what the chart's giving you. You can only trade with the premise of relative equal lows or relative equal highs if it's in price action. If it's not there, you can't refer to it. So if there's nothing else in price because we want below these relative equal lows there, what's left now? At this price point right here, if there were not anything else on the chart yet over here, this is the only chart candlestick at the time you're watching it. Where does your eye go? Well, you'll naturally go to this. But my eye jumps to the stop hunt here and the breaker. And from the breaker to the high where the stops were taken, is there a fair value gap? If there is, I'm going to navigate away from the breaker, and I want to have that premium level right there. I want that. That's the one I want. Everybody else might be trading down here, and they might get a fill right there. And they won't be comfortable trading into this high here or right there. See where it's stopping? It's not random. The market breaks down. That Q, working off of that inversion fair value gap, that drop, and it creates this gap right there, that right there is the sweet spot when you're bearish and you have everything behind you that's in play. It's your optimal trade entry. It's your model 2022. It's right there. And then this becomes a selling point. And now what do you have at this point? You have this low and this low. And what time of the day is that? 8 o'clock. So the price is rallying up against the underlying expected move or directional bias because this move here has caused a potential reversal. So now you have relative equal lows here. But how far can it go? You have to refer to the range prior to that reversal pattern that formed after relative equal highs have been taken. So let me slow you down because you're getting a little panicked, I'm sure. This is too much information, my head's spinning, ICT. All you're doing is you're looking for areas where they can stop people out and go the other direction. That's essentially all you're doing. And you're looking for little periods of price action where obvious highs can be targeted, obvious lows can be targeted for liquidity purposes. And in between them, or if there's nothing new to work off of, then you focus on all of the fair value gaps, the inefficiencies. That means things that we've been coloring here with the rectangles. Okay? Your eye will jump to them with experience. You'll see them more the more you do this. And because of that experience factor, you'll learn to filter out some of them because they've already been used several times. It doesn't mean that they won't be used again. It just means that the ones that are unfilled or left in a state of imbalance, like this portion of this gray box here, from this candlestick's high to that